What's up, you guys? Gio here with Renewable Energy Investments. So in early June, Nikola Stock shot up as high as $94 a share. It's been less than 2 months, and the stock has already dropped 66%, all the way down to back under $30. That's a pretty massive drop in a very short amount of time. And well, we warned everyone in our video called "Is Nikola the next Tesla or the next Plug Power?" Let's all hope Nikola Stock can make a comeback. The more companies trying to solve clean energy with different approaches, the better for all of us. Okay, so here's my take on 5 reasons why Nikola Stock crashed. The first reason is that the stock simply climbed too high too fast with no underlying fundamental reason. The crash can be viewed as a regression back to the mean stock price. One look at the stock chart shows Nikola is now trading exactly where it was just prior to the IPO and surrounding hype. What's troubling is that now we have a head and shoulders pattern developing, and I'd be willing to bet that there are a whole lot of day traders and momentum traders following this stock. We'll have to see, but this may not bode too well for the stock in the short term. Reason number 2 is simply that Nikola's hype is losing steam. Let's recap the hype fueling Nikola's epic rise. In the beginning of May 2020, TikTok and other social media platforms began blowing up with Nikola hype pre-IPO. This caused the stock price to shoot up from $13 to around $25 to $30 a share. When the merger closed and the IPO occurred, a second round of hype catapulted the stock to about $94 per share. Then we come to June 29th. This was the date that customers were first allowed to pre-order the Nikola Badger. On July 2nd, 3 days after the pre-orders for the Nikola Badger started, Trevor tweeted that the pre-orders were coming in at about 1,500 per day. In my opinion, the tweet could have been clearer. I think we all wanted to see the cold hard number of pre-orders to date, but instead, the tweet sort of hid the ball. And July 2nd is the exact date when Nikola Stock's sharp descent began to accelerate. Nikola Stock ran out of hype juice, and has been trading downward ever since. It's hard to keep the hype train rolling when you aren't producing or delivering any vehicles. In contrast, when Tesla unveiled the Cybertruck on November 21st, 2019, only 6 days later, on November 27th, Musk's tweet confirmed there were already 250,000 pre-orders. Assuming the Nikola Badger pre-orders kept pace at 1,500 per day, after 7 days of pre-orders, Nikola would have had a total of 10,500. Suffice to say, the Nikola Badger pre-order numbers are disappointing when compared to the Tesla Cybertruck pre-order numbers. And now, I'm getting ads on Facebook to reserve my pre-order today. The ads look pretty sweet, but it seems to me like Nikola needs help getting more pre-orders. The third reason for the crash is that Nikola registered up to 23.9 million new shares, which would be derived from the exercise of public and private warrants. Warrant holders have until August 21st to exercise their warrants. This means a whole lot of investors will be exercising warrants and then selling the shares they receive in return. And in the beginning, it was a race to sell these warrants before everyone else did, while the price of Nikola stock was still very high. This rush of sales put a lot of downward pressure on Nikola stock, and although it appears the first wave of warrant pressure is over, it won't be fully gone until August 21st. Investors also had a negative reaction to all of the new Nikola shares coming to market, diluting existing shareholders. I would note that anyone who followed Nikola's SPAC IPO closely should have seen this wave of warrants coming from a mile away. The market should have been expecting this, and an efficient market could have already priced this in. Quick reminder to smash that thumbs up button. It helps this new channel out with the algorithms and makes all the research work that I put into these videos feel a lot more rewarding. Also, I invite you to subscribe to this channel to follow along with our discussion of wonderful renewable energy companies. The fourth reason for the crash is that in an SEC filing, Nikola disclosed that insiders intend to sell 53.39 million shares of Nikola common stock. This massive sell-off by insiders may be a sign that these insiders are not confident in the future stock price of Nikola. Investors had a negative reaction to the potential flood of new shares hitting the market. My fifth reason is that investors are increasingly questioning the fundamental aspects of Nikola's business. Nikola's CEO keeps stating that Nikola is vertically integrated, but at the same time keeps saying that Nikola is going to have third-party partners handle manufacturing. Vertical integration and outsourcing are polar opposites. When a CEO's plans don't make sense, investors may be smart to be skeptical. If Nikola is outsourcing, How profitable will their vehicles be once they share revenues with all of their partners who will receive a markup? If producing internally, does Nikola have the expertise and capital to build efficient production lines in a world of automation? Now, I think when Trevor refers to vertical integration, he may be referencing how they plan to produce and sell both hydrogen vehicles and the hydrogen fuel itself. But honestly, I'm not sure, and it's not clear if Trevor is really sure either. He certainly doesn't communicate his ideas very well in a manner helpful to investors, which is a red flag. Many investors are also calling out Nikola for mostly only having graphic renders of many of their products, and a lack of physical vehicles. Finally, investors question how Nikola's hydrogen vehicle business will be profitable given the high cost of producing and storing hydrogen and the large amounts of capital required to build out the hydrogen fueling stations. Unlike reasons 1 through 4, which are short-term in nature, questionable profitability is an ongoing red flag that could hurt this stock price for years to come. I won't get too deep into the financial difficulties surrounding hydrogen as I covered this in depth in our other videos. You can check out our videos called Is Hyliion a Nikola Killer?, Nikola Stock Bull or Bear, and Is Nikola the next Tesla or the next Plug Power? These videos each touch on the long-term ramifications of Nikola's stock price due to concerns of profitability. Ultimately, I could see Nikola being another bull-bear battleground stock, similar to Tesla stock pre-2020. Bulls will point to Nikola leading the potential hydrogen revolution. Meanwhile, bears will focus on the lack of profitability, massive cash burn, and dilution for the foreseeable future. We'll just have to wait and see if Nikola can succeed like Tesla, or if it's going to continue falling off a cliff like Plug Power in the early 2000s. This may take a long time to find out, since Nikola will not even start production and sales of its vehicles until 2021. In the meantime, I'd expect plenty of volatility. Let's all hope Nikola can get this stock price headed back in the right direction, sooner rather than later. But be cautious and remember that the automobile industry has historically been particularly unforgiving to almost every startup not named Tesla. But recently, there's been a whole slew of analyst upgrades, and the Q2 2020 earnings call is another chance for Trevor Milton to hype the company. Nikola stock appears to be a buy the hype and sell the news type of company, at least for short-term traders. I'm going to be sharing my research and insights on Nikola and Tesla stock, as well as other pioneering renewable energy public companies. To get the latest, subscribe to my channel and watch the latest episodes shown to you on the homepage. I'll see you on the next one.